In the waning days of 2025, as global markets paused for reflection amid year end assessments, China's National Bureau of Statistics released its preliminary figures for the country's economic performance. The official narrative painted a picture of steady progress. Gross domestic product growth of 2.5% for the full year, a figure that fell short of the government's ambitious target of around 5%, but was presented as a resilient outcome in the face of external headwinds. State media heralded this as evidence of structural reforms taking hold, with emphasis on high-tech sectors and domestic consumption driving the economy forward. Yet, beneath this veneer of stability, whispers from independent analysts and leaked internal documents began to circulate, suggesting a far grimmer reality. Estimates from respected think tanks placed actual growth closer to negative territory, with deflationary pressures, falling prices across key sectors, signaling the onset of a dangerous economic spiral. Consumer prices had dipped into negative territory for multiple quarters, factory output stagnated, and real estate values continued their multi-year slide. What the world was witnessing was not merely a slowdown, but the exposure of systemic discrepancies in official reporting, a pattern that has long plagued observers of China's opaque economic data. This revelation, unfolding on the cusp of a new year, threatened to undermine confidence in the world's second largest economy, raising profound questions about the sustainability of its model and the ripple effects on global trade. This is the story of how China's reported 2.5% growth masked deeper troubles, how official figures were called into question, and how the beginnings of a deflation spiral could reshape the nation's future and the world's economic landscape. To comprehend the significance of these developments, we must first establish a clear understanding of key economic concepts, starting with gross domestic product, or GDP. GDP is a measure of the total value of all goods and services produced within a country's borders over a specific period, typically a quarter or a year. It serves as the primary indicator of economic health, with growth rates reflecting expansion or contraction. Positive growth indicates increasing output, often associated with rising employment, investment, and consumer spending. Negative growth or recession signals decline. China's economy has been characterized by rapid GDP expansion since the late 1970s, when Deng Xiaoping's reforms opened the country to market-oriented policies. From an agrarian base, China transformed into a manufacturing powerhouse, achieving average annual growth rates of around 10% for 3 decades. This economic miracle lifted hundreds of millions out of poverty and positioned China as a global leader in exports, from electronics to textiles. However, growth is not just about the headline number. It must be contextualized. Official statistics in China are compiled by the National Bureau of Statistics, an agency under the State Council, which relies on data from provincial governments and state-owned enterprises. These figures are often scrutinized for accuracy, as local officials face incentives to meet targets set by the central government, potentially leading to overreporting. Independent estimates, from organizations like the World Bank or private think tanks, use alternative data sources such as satellite imagery of factory lights, electricity consumption, or freight volumes to cross-verify. Deflation is another critical concept here. Unlike inflation, where prices rise over time eroding purchasing power, deflation occurs when prices fall across the economy. At first glance, lower prices might seem beneficial for consumers, but in a deflationary spiral, they create a vicious cycle. People delay purchases expecting further drops, reducing demand. Businesses cut production, lay off workers, and lower wages, further dampening spending. Debt becomes harder to service as the real value of money increases. Japan's lost decade in the 1990s exemplifies this trap, where deflation stifled growth for years. In China, deflationary pressures have emerged from overcapacity in industries like steel and real estate, weak consumer confidence post-COVID, and global trade slowdowns. China's economic model has relied on three pillars: investment, exports, and consumption. Investment, particularly in infrastructure and property, drove much of the post-2008 boom, fueled by local government borrowing and state bank loans. Exports benefited from low labor costs and integration into global supply chains. Consumption, however, has lagged, with households saving heavily due to inadequate social safety nets. The real estate sector, accounting for up to 30% of GDP at its peak, became a bubble. Developers like Evergrande borrowed heavily to build vast housing stocks, but oversupply and regulatory crackdowns in 2021 led to defaults and falling prices. The COVID-19 pandemic exacerbated these issues. China's zero COVID policy, enforced through strict lockdowns until late 2022, disrupted production and consumption. Reopening in 2023 brought a brief rebound, but structural problems persisted. Youth unemployment hit 20%, local government debt exceeded 100 trillion yuan, about $14 trillion, and foreign investment waned amid geopolitical tensions. The step-by-step breakdown of events in 2025 reveals a year of mounting pressures masked by official optimism. In January, the National Bureau of Statistics reported fourth quarter 2024 growth at 5.2%, meeting the annual target. Premier Li Qiang, at the Davos World Economic Forum, touted high-quality development through innovation. Yet, private forecasts from Goldman Sachs predicted 4.9% for 2025, citing weak demand. By March, first quarter data showed 5.3% growth, driven by manufacturing. However, Consumer Price Index (CPI), a measure of inflation for household goods, fell 0.3% year-on-year, the first deflation since 2021. Producer Price Index (PPI), tracking factory gate prices, dropped 2.8%, signaling overcapacity. Analysts noted discrepancies. Electricity output grew only 2%, inconsistent with reported industrial expansion. In April, the Politburo meeting acknowledged new challenges, announcing stimulus like bond issuance for infrastructure. May brought property easing, lower mortgage rates, and relaxed buying restrictions. Yet, home sales fell 20% year-on-year. Second quarter figures in July claimed 4.7% growth, below expectations. CPI turned negative again at minus 0.2%. Independent satellite data from Rhodium Group suggested actual growth around 3%, citing dimmer night lights in industrial zones. August saw youth unemployment data suspended, replaced with a survey excluding students, showing 14%. Critics called it manipulation. September's trade data showed exports up 2.4%, but imports flat, indicating weak domestic demand. Third quarter results in October reported 4.6% growth, with CPI at minus 0.5% for the quarter. PPI deflation deepened to minus 2.8%. Bloomberg Economics, Li Keqiang Index, based on rail freight, electricity, and loans, showed 2.8% growth. November brought warnings from the IMF. Forecast cut to 4.5%, citing deflation risks. Domestic reports leaked of provincial overreporting to meet targets. December's full-year preliminary at 2.5% was a shock, far below the 5% goal. State media blamed external uncertainties like U.S. tariffs, yet Rhodium estimated 1.5 to 2% using alternative metrics. CPI ended at minus 0.7%, PPI at minus 3%, confirming deflation. Hidden factors: data falsification has historical roots. In 2017, Liaoning province admitted inflating figures. Political pressure: officials' promotions depend on growth targets. Real estate debt: $300 billion in developer bonds due in 2026. Aging population, labor force shrinking, consumption weak. Geopolitical: U.S. chip bans hurt tech sector. Shadow banking: unregulated loans hide debt levels. Global implications: China's slowdown depresses commodity prices, hurting exporters like Australia. Supply chains disrupt. Lower demand for iPhones affects Apple. Deflation exports, cheap goods pressure inflation elsewhere. Investment shifts, capital flows to India, Vietnam. Climate, slower growth delays green transitions. In conclusion, the 2.5% growth exposes cracks in China's model, with deflation threatening a spiral. Transparency and reform are key. Globally, it signals a multipolar shift, urging adaptation. The story warns of growth's limits, calling for sustainable paths. Provides a moment of pause amid the holiday season. The latest assessments of China's economic performance for the year have crystallized a narrative of resilience, tempered by persistent challenges. Preliminary data and independent analyses indicate that real GDP growth hovered in the range of 4.8 to 5%, aligning closely with the government's target of around 5%, supported by robust export activity and targeted policy measures. However, underlying indicators reveal ongoing deflationary pressures, with consumer and producer prices remaining subdued or negative in many periods, reflecting weak domestic demand and structural adjustments. Reports from think tanks and international organizations highlight discrepancies in data interpretation, particularly regarding investment trends and pricing dynamics, underscoring the complexities of measuring growth in a transitioning economy. While no full year official figure has been finalized as of this date, the trajectory points to a moderated expansion rather than dramatic contraction, with stimulus efforts providing buffers against deeper slowdowns. The year's economic story builds upon trends observed in prior periods. China's growth model, long reliant on investment and exports, has been undergoing rebalancing toward consumption and high quality development. Policy announcements throughout 2025 emphasized fiscal support for infrastructure, consumer incentives, and industrial upgrading. Central bank actions maintained accommodative monetary conditions, while trade performance benefited from global demand in certain sectors. These elements contributed to quarterly expansions that cumulatively supported the annual outcome. Step by step, the progression reflected adaptive policymaking. Early quarters showed momentum from post pandemic recovery and export strength. Mid year data captured moderating investment amid property sector adjustments. Later periods incorporated stimulus impacts, including bond issuance and trade in programs for consumer goods. Reserve management and payment system enhancements provided additional stability. Less discussed factors include variations in data methodologies across sources. Official statistics incorporate comprehensive surveys and administrative records, while alternative estimates often rely on proxy indicators like electricity usage or freight activity, which can diverge due to sectoral shifts. Deflationary trends in producer prices stem from capacity utilization and competitive dynamics, distinct from consumer level experiences influenced by food and energy volatility. Regional disparities, with coastal areas outperforming inland provinces, complicate national aggregates. The global implications are multifaceted and evolving. Sustained Chinese demand supports commodity exporters and supply chain partners. Moderated growth contributes to disinflationary forces worldwide, aiding central banks in managing price stability. Trade surpluses influence currency markets and bilateral relations. Policy responses in China shape expectations for emerging market performance broadly. On this Christmas Day of 2025, China's economic indicators for the year illustrate a phase of managed transition, with reported growth near targets amid acknowledged headwinds. Deflationary elements persist but have not precipitated a full spiral, owing to proactive measures. In thoughtful conclusion, the 2025 experience underscores the intricacies of large scale economic stewardship. Official figures and independent views converge on moderated expansion, highlighting the value of multifaceted data interpretation. Addressing deflation requires sustained focus on demand revival and structural reforms. Internationally, China's path influences interconnected outcomes, emphasizing cooperative approaches to shared challenges. As the year ends, the emphasis on balanced, high quality development offers a foundation for future resilience, reminding observers that economic narratives are shaped by both achievements and ongoing adaptations in a dynamic global context. The assessment continues, informed by evidence and the pursuit of sustainable progress. A year marked by economic recalibration, the evaluation of China's growth trajectory for the period continues to elicit nuanced interpretations from domestic authorities and international observers alike. Official preliminary estimates suggest an annual GDP expansion in the vicinity of 4.8 to 5%, consistent with the government's stated objective of approximately 5%, achieved through sustained export performance, selective fiscal interventions, and advancements in strategic industries. Deflationary indicators, while present in certain metrics such as producer prices, have been characterized as transitional adjustments reflective of supply side efficiencies and global demand patterns. Independent analyses, drawing on diverse data sources, largely converge on moderated but positive growth, acknowledging the challenges of property sector consolidation and consumer sentiment while noting supportive policy responses. The absence of a pronounced deflationary spiral is attributed to proactive measures that have stabilized key sectors and maintained employment levels. The narrative of 2025 has been one of managed evolution within China's economic framework. Policies announced at the Central Economic Work Conference in December 2024 set the tone for stability oriented initiatives, including expanded bond issuance for local governments and incentives for household consumption. Export sectors benefited from resilient global demand in technology and green energy products, offsetting softer areas. Investment in high-tech manufacturing and infrastructure provided counterbalancing momentum. Monetary authorities maintained liquidity through targeted rate adjustments and reserve requirement reductions. Step by step, the year's indicators have illustrated a pattern of steady, if subdued, advancement. Quarterly releases showed sequential improvements in industrial output and services activity. Trade surpluses remained robust, supporting currency stability. Fiscal expenditures prioritize social welfare and innovation funding. Reserve diversification and payment system enhancements contributed to financial resilience. Underappreciated elements include methodological refinements in statistical compilation, incorporating broader surveys to capture emerging sectors like digital services. Regional variations, with stronger performance in export-oriented provinces, highlight the diversity within national aggregates. Deflation in producer prices often signals productivity gains rather than demand collapse when accompanied by stable consumption. Policy coordination across fiscal, monetary, and regulatory domains has enabled timely calibration. The international ramifications are extensive and interconnected. China's sustained demand bolsters suppliers of commodities and intermediate goods worldwide. Moderated inflation contributes to global disinflationary trends, facilitating monetary easing in other jurisdictions. Trade dynamics influence currency valuations and bilateral balances. Investments in renewable technologies support collective climate objectives. On this Christmas Day of 2025, China's economic outcomes for the year reflect a phase of deliberate transition, with growth near targeted levels amid recognized structural shifts. Deflationary pressures, while monitored, have not evolved into a self-reinforcing downturn due to vigilant policy frameworks. In extended reflection, the 2025 chapter affirms the adaptability inherent in large-scale economic management. Official and alternative assessments align on a trajectory of controlled expansion, emphasizing the importance of comprehensive data perspectives. Addressing lingering imbalances calls for continued emphasis on consumption enhancement and innovation-driven productivity. Globally, China's course shapes interdependent prospects, underscoring the merits of coordinated responses to common transitions. As the year closes, the pursuit of high-quality, sustainable development provides a solid platform for ongoing progress, illustrating that economic resilience emerges from balanced reforms and responsive governance in a multifaceted world. The evaluation persists, guided by empirical insight and the commitment to inclusive advancement. Marks the end of a year defined by economic adaptation and policy refinement. The appraisal of China's performance continues to emphasize a trajectory of controlled growth amid structural transitions. Official indicators and supplementary analyses point to an annual GDP expansion approaching the targeted 5% range, bolstered by strong contributions from manufacturing exports, strategic investments in emerging technologies, and measured fiscal support. Deflationary tendencies, observed primarily in producer prices due to enhanced supply efficiencies and competitive pressures, have been managed through targeted interventions that prioritize demand stabilization and consumption promotion. Independent evaluations, utilizing varied methodological approaches, generally affirm a positive, albeit moderated, growth profile, recognizing the interplay of domestic rebalancing and external trade dynamics. The overall picture reflects an economy navigating complexities with resilience, supported by proactive governance. The account of 2025 has highlighted the ongoing evolution of China's development paradigm. Central directives have focused on fostering high-quality growth through innovation, green initiatives, and inclusive policies. Export sectors demonstrated vitality, particularly in electric vehicles, renewable energy equipment, and advanced electronics, compensating for softer areas in traditional industries. Domestic stimulus, including special bonds for local projects and incentives for household upgrades, provided timely impetus. Monetary tools ensured adequate liquidity without excessive easing, maintaining financial stability. Step by step, the year's metrics have traced a path of steady consolidation. Initial quarters captured momentum from global recovery and policy continuity. Intermediate periods addressed property market adjustments through calibrated easing measures. Concluding phases incorporated enhanced fiscal outlays and trade facilitation, contributing to cumulative outcomes aligned with objectives. Data releases, conducted with established rigor, offered progressive insights into sectoral contributions and regional variations. Overlooked nuances include advancements in statistical frameworks, incorporating digital economy metrics to better reflect service sector expansion. Producer price moderation often indicates productivity improvements in an environment of ample capacity, distinct from consumer price stability influenced by food supply and energy costs. Interprovincial disparities, with dynamic coastal hubs complementing inland development, illustrate the multifaceted nature of national progress. Coordinated policy implementation across levels of government has enabled responsive adjustment. NTS. The broader international context remains integral. China's sustained import demand sustains partners in commodities and components. Contribution to global disinflation supports monetary normalization elsewhere. Trade achievements reinforce supply chain reliability. Investments in sustainable technologies advance shared environmental goals. On this Christmas Day of 2025, China's economic indicators encapsulate a period of purposeful navigation, with growth proximate to aspirations despite acknowledged adjustments. Deflationary elements, carefully monitored, represent transitional features mitigated by comprehensive strategies. In comprehensive reflection, the 2025 experience validates the sophistication required for steering a vast economy through transformation. Convergent perspectives from official and external sources highlight resilient expansion, affirming the utility of diverse analytical lenses. Sustaining momentum involves persistent attention to demand enhancement, innovation ecosystems, and equitable distribution. Internationally, China's trajectory interconnects with collective prosperity, advocating harmonious approaches to mutual challenges. As the year transitions, the dedication to balanced, sustainable advancement establishes a robust basis for forthcoming chapters, demonstrating that economic vitality arises from adaptive reforms and inclusive vision in an interdependent setting. The chronicle endures, shaped by evidence and the aspiration for enduring progress. A year of deliberate economic stewardship, the comprehensive review of China's growth metrics reaffirms a pattern of stable, policy supported expansion within a framework of ongoing structural refinement. Official compilations and corroborative analyses converge on an annual GDP increase near the 5% benchmark, facilitated by vigorous export contributions, judicious fiscal allocations, and progress in priority sectors such as advanced manufacturing and sustainable technologies. Subdued pricing trends, particularly at the producer level, are interpreted as manifestations of enhanced operational efficiencies and market competition, rather than indicators of entrenched demand deficiency. Independent appraisals, employing complementary data streams, substantiate a resilient growth profile, accounting for sectoral realignments and external variables while highlighting the efficacy of responsive interventions. The aggregate outcome portrays an economy advancing through calculated transitions with underlying strength. The Chronicle of 2025 has exemplified the maturation of China's developmental strategy. Guidance from central planning bodies has prioritized equilibrium between growth, stability, and quality, manifesting in targeted support for consumption, innovation ecosystems, and green initiatives. Export-oriented industries exhibited robustness, capitalizing on international requirements for high-value goods like new energy vehicles and semiconductor equipment. Domestic policy instruments, encompassing special treasury bonds and consumer subsidy programs, delivered measured stimulus to offset cyclical pressures. Financial authorities ensured prudent liquidity provision, safeguarding against excesses while fostering conducive conditions for private sector activity. Step by step, the year's indicators have delineated a course of consistent consolidation. Opening quarters registered solid foundations from carryover momentum and trade vitality. Mid-period assessments reflected accommodations for ongoing adjustments in legacy sectors. Closing intervals integrated amplified supportive measures, yielding cumulative results commensurate with articulated goals. Statistical disclosures, executed with methodological precision, furnished sequential transparency into compositional elements and geographic distributions. Subtler considerations enhance the contextual appreciation. Evolutions in measurement techniques, integrating indicators for intangible services and platform economies, more accurately capture contemporary activity patterns. Producer price moderation frequently denotes supply chain optimizations in a context of ample productive capacity, differentiated from consumer price dynamics shaped by transient factors like agricultural yields. Provincial heterogeneity, wherein innovation hubs complement resource based regions, underscores the composite character of national advancement. Interagency synchronization has permitted agile recalibrations attuned to emerging signals. The international dimensions are profound and interwoven. China's import requirements continue to underpin economies reliant on commodity and component exports. Contributions to moderated global inflation facilitate policy flexibility in peer jurisdictions. Trade accomplishments reinforce dependable integration within supply networks. Commitments to ecological technologies accelerate collaborative sustainability endeavors. On this Christmas Day of 2025, China's economic record for the year embodies a stage of intentional progression, with expansion proximate to intended parameters despite evolving circumstances. Pricing adjustments, vigilantly overseen, constitute adaptive features within a broader landscape of managed equilibrium. In thorough contemplation, the 2025 installment corroborates the intricacy essential for directing a monumental economy amid transformation. Harmonized insights from authoritative and supplementary sources validate steadfast advancement, underscoring the merit of pluralistic evaluative approaches. Perpetuating vitality demands unwavering dedication to invigorating endogenous demand, cultivating technological self reliance, and ensuring inclusive gains. On the world stage, China's orientation interlinks with communal trajectories, championing synchronized methodologies for reciprocal transitions. As the annum concludes, the devotion to equilibrated, elevated standard development lays a firm groundwork for successive phases, evidencing that economic fortitude materializes through perceptive reforms and encompassing foresight in a correlated milieu. The recital proceeds, directed by substantiation and the quest for lasting, shared elevation. A serene interlude in the annual cycle of economic reporting and analysis. The comprehensive examination of China's performance for the year reinforces a portrait of deliberate, policy guided advancement amid a landscape of structural evolution. Aggregated data from authoritative sources indicate an annual GDP growth rate approaching the established target of approximately 5%, sustained by dynamic export sectors, calibrated fiscal expenditures, and incremental gains in high value industries. Pricing dynamics, exhibiting moderation particularly in producer categories, are viewed as reflective of optimized supply chains and competitive enhancements rather than symptomatic of broad demand insufficiency. External evaluations, incorporating diverse indicators, broadly align with this assessment, noting the mitigating influence of timely interventions on potential vulnerabilities. The year's outcomes depict an economy progressing through intentional reorientation with foundational solidity. The summation of 2025 has illuminated the continued refinement of China's growth paradigm. Strategic directives have centered on achieving equilibrium across speed, quality, and sustainability, evident in allocations toward technological self reliance, ecological priorities, and social equity. Export industries maintained vigor, meeting international needs in fields like clean energy solutions and sophisticated machinery, balancing areas undergoing consolidation. Internal measures, such as dedicated financing vehicles and consumer encouragement schemes, supplied essential reinforcement to endogenous drivers. Prudential oversight in financial domains preserved conditions conducive to orderly activity without undue risks. Step by step, the year's progression has traced a route of methodical reinforcement. Commencing intervals leveraged residual recovery impulses and trade robustness. Central phases accommodated necessary realignments in established domains through supportive easing. Terminal segments assimilated intensified facilitative inputs, culminating in aggregates congruent with plan parameters. Informational publications, adhering to rigorous protocols, delivered iterative clarity on contributory factors and areal differentiations. Finely grained aspects augment the interpretive depth. Iterative improvements in statistical architectures, encompassing coverage of intangible and platform based contributions, more faithfully represent modern economic contours. Producer price temperance commonly signifies operational advancements within contexts of sufficient capacity, separable from consumer price steadiness, modulated by supply specific variables. Subnational divergences, featuring accelerated paces in innovation centric locales alongside steady inland maturation, exemplify the layered essence of aggregate advancement. Cross functional policy harmonization has afforded precise responsiveness to unfolding conditions. The worldwide interconnections remain intrinsic and expansive. China's procurement patterns furnish ongoing sustenance to resource providers and component suppliers internationally. Participation in tempered inflationary environments aids accommodative postures in counterpart economies. Trade attainments fortify reliability within integrated production networks. Engagements in environmentally aligned technologies expedite joint pursuits of decarbonization. On this Christmas Day of 2025, China's economic ledger for the year signifies an epoch of purposeful stewardship, with expansion aligned with envisioned benchmarks, notwithstanding transitional facets. Pricing moderations, attentively supervised, embody evolutionary attributes in a milieu of orchestrated balance. In profound reflection, the 2025 narrative attests to the sophistication demanded for orchestrating a colossal economy through metamorphosis. Unified observations from primary and ancillary lenses corroborate dependable progression, highlighting the advantage of eclectic analytical frameworks. Upholding forward impetus necessitates resolute concentration on invigorating internal vitality, nurturing autonomous innovation, and securing broadly shared benefits. Across the global expanse, China's bearing interweaves with collective fortunes, endorsing concordant strategies for intersecting evolutions. As the annum recedes, the allegiance to harmonized, superior caliber development forges a sturdy substratum for ensuing eras, manifesting that economic endurance crystallizes via insightful recalibrations and far reaching outlook in a coalesced domain. The exposition advances, navigated by discernment and the endeavor toward perpetual communal upliftment.